Hello guys, so this is a pre-market analysis of 25th of March. So we will see how the market is positioned for today. We will look at US markets and then we will look at GIFT Nifty, we will look at the ADRs and we'll look at the institutions and everything. And before that, I'm uploading this video in the new channel because my old channel got hacked. So I have to upload it in a new channel. So from here onwards, the pre-market, post-market and everything will be updated here. So please support here also. So let's start, right? The core theme is again this market confusion. So what exactly is happening is yesterday we discussed something, right? Because every day things are changing. 3 days back, Trump was saying in 48 hours he will disrupt everything in Iran, right? The kind of obliteration is the word that he used. And in fact, he used that word multiple times also in this context, the war context. And Monday evening, he said, talks with Iran is happening and the attacks, any such kind of military strikes is postponed for 5 days. But again, when market opened yesterday, Iran have actually denied this, right? And Iran said there is no negotiations happen. And Iran also launched ballistic missile at Israel. So now the market is confused to whom you need to believe, right? Who's right and what is the real situation. So the result we have seen very clearly yesterday. It was a gap up opening, but not as much as we expected. We were looking for around 500 point. If you look at GIFT Nifty and how Dow performed and everything, how US markets have performed and everything, but we got around 350. But somehow after the dip they were able to cover up. If you see intraday low to intraday high, almost 500 point bounce, and such kind of volatility is what you have seen. One reason is this, but what expiry related positioning was also one of the reasons. The short covering was also one of the reason. But why short covering need to happen? Because if there is a positive news, right? So now the question is to whom you believe, right? So, but the important observation is we can say this is his aggressive stand is actually coming down, right? It could be a first step towards a de-escalation. And from markets perspective or interpretation, if you see, the situation is considered still positive. Now, what is actually driving the market? It's not Iran-US war. It's not Iran-Israel war. It's not how many people got killed there, whether there is a regime change or not, right? There was some issue with Venezuela. It never went into such a war kind of situation, and it did not, influence the market. Why this is influencing the market? It is because oil. So even though Venezuela some issue was there, oil was not affected. But here, Strait of Hormuz, oil are even it is many of our hotels are closed actually these days if you observe, because the gas supply is not there. So yesterday, if you see, despite all these, crude price was not rising. It's still below 100. Instead, in fact, if you look at it, it's trading between 95 and 100, which is below the psychological level, which is actually good. So when you see morning, Brent was near around $100 per barrel, and Nifty was around 22,700. That's the lowest of Nifty. And when oil fell, you can see Nifty have moved to 23,000. You can see some kind of short covering also. So the idea is it's very clear. If something positive for oil, it is definitely positive for market. If something negative for oil means oil price is going up, it is definitely going to be very negative for the market. So what can happen in our market is now based on what is happening with crude oil. Now, what is happening with crude oil is connected with what Trump is talking about, what Iran is talking about, what attack is going on, where the attack is going on, and everything. So the war connected with oil and oil connected with our market. It's not that the war connected with our market. Okay, so I hope this is very clear. So keep a watch on the oil chart also. And then if you see a dip, we can go up. It's like inverse proportionality. Another trigger was related to HDFC Bank. They appointed an external law firm to review the resignation of the former chairman. And because of that itself, the stock have increased 3%. One of the major negative, in fact, that is ignored by the market yesterday. We need to see whether that impact will be visible today. Goldman Sachs view. Earlier, they forecasted a 7% growth for 2026. Now it has been revised to 5.9. So there is a cut of almost 110 basis point, right? 7 to 5.9. Also, the expectation is that RBI may increase the interest rate by 50 basis point in the next monetary policy. If that happens, that is very negative for the market. So this forecast itself is actually very negative, but market ignored that because global development is more important than this growth and inflation and all those now. And at the same time, expiry date was yesterday. So expiry related positioning and the short covering is what we have seen. Now, US market also, this confusion is going on. Trump again said that the talks are happening. Iran, agreed to have no nuclear weapons. And there are officials involved like JD Vance and Marco Rubio. But there was a CNN report that talks are not at full negotiation level. Again, because of that, US markets have closed negative. We have seen that. So Dow has one two range, right? S&P also, all these Dow Jones, S&P and Nasdaq closed in between 1 to 2% negative range, and VIX also increased 3%, and it's now near almost 27. 25 above, even 20 above is showing that uncertainty and fear. 25 above is showing extreme uncertainty and fear. So still, it's above 25. It's at 27. In our market also, it's around 25, right? Now, there is a positive trigger in between. This is the latest development. When I'm recording this video, I have heard this, I've read this news. So, Pakistan have offered to host a peace talk. And in fact, the US have proposed a 15-point peace plan. And that proposal include also 1 month ceasefire, not this 5 days. And Iran's response is not very clear. It's not yet confirmed. But again, market is believing that this is genuine. And if you see after that, US futures have reacted very positively despite US market have closed negative. US futures have recovered all its losses, and it's indicating all indices. If you see, it's 6 to 8% up. So the entire previous session fall off actually recovered, and that looks positive. But GIFT Nifty closed at 22,913. That means there is a flat opening, but since US market is recovering, there is a positive bias. So if you get a flat opening, I think it is better to go on the upside. Okay. So if you are getting a bigger gap up, then it is not good to chase a rally. Any war situation, even though positive news are coming, still there could be a sell-off which can come because FIAs are still selling. Yesterday also, I think they sold for almost 8,000 crore. That's the 18th consecutive session that FIAs were selling, and DIAs bought for almost 5,000 crore. Then who took the market from the lower to higher? No one knows. Okay, it could be the retailers only, of course. So the point is, in case if you're getting a flat opening, considering the positivity around, considering this peace talk, discussions, and the way the US futures have recovered all its losses, we may get an up move. A sharp up move is also possible. We may get a gap fill also of what happened on the last day. Again, if you look at Indian ADRs are indicating negative, there is a decline of 1 to 3%, which is again very negative. But that I told you, this is before this latest news. US market also closed 1 to 2% negative. So that impact is there. Otherwise, this rate hike concern is also there. And if you look at ADRs, IT underperformed banks, and there is an arbitrage. There is an arbitrage of almost negative arbitrage of almost 1.5% as well. FIA data I told you. And if you look at the open interest, it was either unwound or expired because it's expiry day. Calls, it's 38%. Puts it 26%. Because of that, if you see 38% calls unwound or expired, and only compared to puts, it's 26% only. So calls are more. More calls have gone, right? That means PCR will improve, right? So it's 9.99 now, which is almost equal to 1. That means neither a bullish nor a bearish bias in terms of open interest. Now the fresh positioning have to come after the expiry today. Apart from that, there are some positive developments. So already there is a flat, like if you look at the open interest bias, it's flat. A PCR, it's flat, one only. Now, since positivity, if you are getting more put sold, then we will see a market up move. Now, if you look at the positioning, retailers 26% net long, FIA is 21% net short, prop traders also, they are negatively positioned. So retailers are positive, FIAs and prop traders are negative. If you look at the futures, there is not much major change. So again, call open interest, if you see maximum at 23,000 is also there, 23,500, 23,200, 23,800. Put side 23,000. So that is a straddle that the call and put is there. And 22,800, 22,500 level. So market is confused now. So both side moves can come. Volatility is what expected. But if you get a flat opening, that is going to be an opportunity for you to go on the upside today. So there are positives that the oil is not rising and market pulse is connected with oil. There are peace talks, which is possible that Pakistan initiative is there. So that is also positive. US futures have turned positive and recovered all its losses of the last day. That's very positive. Negative is these contradictory statements. US is saying something, Iran is saying something. Immediately, Iran is attacking also, not just saying something. Iran is showing its power and its resilience and its strength also. Goldman Sachs downgrade of growth, that is very negative, but it's not reflected yesterday. We may see that impact today. Also, inflation is expected, and interest rate hike of 0.5% is discussed. Right, rate hike risk is there. FIAs are still selling. These are negatives. So the primary driver of the market, I repeat, if the oil price is falling, market goes up. If oil price is rising, market's under pressure. So there is an inverse proportionality. So keep that in mind. And yesterday's technical, if you see, there was a 360 point gap up opening and made a low of 22,620 also, and they closed at 22,900 level. Right. So small bullish candle is what you see. Small because if you look from previous day close to yesterday's close, it's good. But opening to closing is what we see because there is a 360 big opening. Candle is small. Upper shadows there from the top and lower shadows there. 23,050 level, you got the sell off, and from the bottom level, you got an aggressive bounce also. So there is again an indecision. So structure, the downtrend is still intact. All EMAs are hinting downside, right? And 100 EMA is now breaking below the 200 EMA. 50 breaking 200 is a golden crossover. Now this is kind of diamond crossover, what to say. RSI is around 34. It's still bearish. So the levels are 23,000 to 23,300 for today. Support, if 23,000 above, if you are getting, it is perfect. The immediate support is 22, sorry, not the range. I'm talking about resistance 23,000 to 23,300. Support 22,700, 22,800 to 22,600. 22,600, it can go. The way market was going down, any bad news, it can take down to that level. If you see Bank Nifty, 950 point gap up, but we have seen the low of 51,830 also. Remember, Bank Nifty is coming from 61,500 1 month back. Right now, yesterday's close, if you see, 52,600. So again, a small bullish candle. It's an indecision, and the structure lower high, lower low, that's still intact. Moving averages are downside. 50 EMA here approaching 200 EMA just before. I discussed that it's a golden crossover. But there, that happened much before. Now 100 EMA is approaching 200 EMA in Nifty, right? So RSI, if you look at Bank Nifty, it's 31. It's below 40. Now the important levels, resistance 53,000 immediately, right? That is 400 point away, and 53,300. Support 52,200 and 52,000. Options, as I told you, maximum call is at 23,500. After that, 23,000 also there. That's the straddle players. And 23,700 is there. Fresh writing is what you can see, 23,000, 22,900 also, because market closed at around 22,900 level. And that could also be straddle players, and then 23,500. Put side, if you see, 23,000, again straddles, 22,500, 22,800. 23,000 is where maximum fresh writing is coming, and 22,900 is also there, 22,800 is also there. So the expected ranges, the low we have seen so far, right? That is around 22,500 level. That is the bottom that we are taking now for the reference, and 23,500, that 1,000 point range is what we are looking for temporarily. So overall market is confused, but still market is holding. Oil is not spiking, that's a support. War, still uncertain, and fear is there. So see, again, confusion is an opportunity. As a scalper, if you are looking to scalp opportunities, you can get this. If you are looking for some bigger, momentum trades or trend trades, you'll not get it. So direction completely depending upon the oil movement and the P stock outcome. So keep a watch on the news headlines, keep a watch on the oil chart. And if you would like to trade with us, you can join us for our live market mentoring program where we teach live also. So see you there. Thank you.